Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of November 4th. We're going to be looking at the stock market, Bitcoin, and gold. And each week I go through the same process, just seeing if how the indices and everything are looking, whether I want to be taking long trades, short trades, how aggressively I want to be doing it. There are some watch lists you can check out. This Swing Trading Stocks watch list, this will be updated shortly. This one's from middle of October. Still some interesting stocks on it, but it gets updated twice a month near the middle and end of the month. And then some other ones you can check out. So let's dive into the price action, like looking at a few different indices. And you can see here, so we had this bigger move up, and then it's been a little bit more ragged since. And all the indices are kind of the same. In that aspect, bigger move up, much smaller move up, and a little more choppy lately. And these pullbacks are challenging some prior swing lows. So that can indicate a couple things, that it's either going to get more rangy, or we're in kind of a range if we get the bounce here, or if we continue to sell off, then the uptrend's definitely in question. So we can be in an uptrend and we're just in a choppy period if we move up, or it's starting to look a little uglier if we start getting bigger sell-offs. NASDAQ, you can see, took out, the NYSE composite, a very broad measure of stocks, took out this little shelf we had here. So a little bit bearish there, but again, it hasn't penetrated it by a lot. So if we get the bounce here, no problem. If we keep selling off, obviously, bigger problem. So how do we adjust our trading accordingly? Well, I'm not being too aggressive on new positions. I've trailed in some of my existing positions, and then I have some that are still open that are doing okay, but those would likely get trailed out too if we start to sell off in the market, because most stocks do move with the indices. Russell 2000, you can see very choppy for quite a while. Even the Canadian index, which has been really strong here, having a bit of a sell-off lately. So still in an overall uptrend. This was the last kind of swing low here. Decent move up. We're still hanging out above that. So overall uptrend, not really being challenged yet, but in some of these other ones, bigger sell-off following some small rallies, uptrend being a bit challenged. Bitcoin, this is a 2-day chart, simply so I can show the overall context of this really big move up. Then we had this channel, which we've discussed every week since it's been going on pretty much. And we had this move up kind of out of the channel a little bit, a little consolidation, and I took some longs here again. I've had the pop-ups. This is kind of a retest again. How's it going to hold above this level? If we start getting back into that old range, I want to see till it resets, moving back up. If it's coming back into this area, that's kind of says that breakout failed to me. Gold, we discussed this pattern where it's kind of been moving up 15 to 20%, followed by these kind of 9-10% type pullbacks. And last week was interesting because gold was going up here kind of earlier in the week, midweek. And I was watching this, and I was kind of debating, like, do I want to? I don't usually trade the gold miners ETF, but I was thinking there wasn't a lot of other trades. Mark was kind of starting to trail off a bit. So I was like, do I want to get into the gold miners ETF? But something interesting was going on. Gold had this big up day, and the miners ETF was like just hanging out here. It wasn't moving up, and that was a pretty good indication that was out of legs. That it wasn't a good time to buy the miners, and that was one of the first real significant times that the miners were significantly diverging with what gold was doing. You can see they obviously have different trajectories, but these declines and these rallies generally occurred with the rallies and declines in gold, and this was a pop where we got no pop in the miners. So. And then we had this pattern of this was at about a 6% pullback, and we'd had a pretty steady pattern of those bigger pullbacks. So I opted to leave it alone, just see what happens. I'm like, if it's not going up when gold has a big pop, why would it go up? So now is maybe a better point that I'd maybe consider a long, just because it's a little more in line with this trend. But we did get that divergence, and we're seeing gold sell off a little bit. So we'll see. If gold continues to hold up and starts to bounce here, maybe the gold miners, if they also pop, they're looking good. But if these sell off and gold does pop, not a good sign. You want these two moving together. So yeah, just something to keep an eye on. So a little bit of a yellow flag there in gold, but at least price action wise getting into a more interesting spot there for a potential long if we get gold moving up and the miners also moving up. One other thing, November, typically one of the best stocks of the month. This is the NYSE Composite, very broad measure of stocks. Over the last 7 years, up 70% of the time, 1.9% average gain. Over the last 10 years, 80% of the time, 3.5% average gain. Now, if you wanted to dig in this further, you would want to look at election years because we do have the election coming up. Heightened volatility, we'll talk about that in just a second. But you can see pretty much across the board, November tends to be, historically, this is not predictive, this is just historically, has been a very good month. Health market conditions, mediocre. Kind of what we saw in the price action, definitely some, kind of not so good things. Again, if conditions are perfect, generally I'm going to be more aggressive. If they're horrible, I'm going to be out. If they're mediocre, I'm deploying capital very cautiously. And we are in mediocre shape, so I would be deploying capital cautiously. So this is what's going on. This is the S&P 500 volume, not really important to me at the moment. This is daily percentage movement of the S&P 500. And when we get 2% drops, that's usually not so good for the next little while. You might get like a little pop, and if you do happen to get it, you're like not missing much. So you had this little rally, and then it sold off again. So these 2% down days, there was another one, we ended up selling off a little more. So when we get these big down days, I'm usually not too eager to jump in. So this one was just under 2%, but it was still kind of a heightened volatility day, and the election's coming up in the US, so that could be expected, and so it might be a time to just be a little wary. So this is a neutral. I haven't put a frowny face on it because it wasn't quite to that big magnitude that some of these other ones were, but it was noticeable, and it was a pretty big sell-off. This is the NYSE advanced decline line. Advancing stocks minus declining stocks is a cumulative number. Kind of shows what's going on under the hood a little bit. And I'm just going to move this over so we can see these numbers. And so it's still smiling. It's actually holding up pretty good. Like it's been flatlining here for this last little bit while the S&P drops. So it's kind of diverging a little bit. The indices are dropping. It's holding up. So that's still okay. This one's nothing. Up volume divided by total volume. I'm just looking for extremes. Basically, most of the volume that occurs in stocks moving to the upside. That would be in this upper area. Or most of the volume that occurs in stocks are moving to the downside, and that would be hitting this lower line. And you can see we're in the middle, not overall, not telling us anything. This is the percentage of stocks above their 50-day moving average. 50-day moving average is just a very crude measure of stocks in uptrends or downtrends. And 48% for both. So the red line is the S&P 500 and the green line is all US stocks. And we're right around that kind of half of stocks are above their 50-day, half are below. Kind of on the cusp there. I put it as a neutral. Yeah, we're just riding that line. So again, it's not great. It's not horrible. So what does that tell us about how aggressive we should be? Well, we probably want to be in the middle. Not too aggressive, but don't have to totally back off either. Sectors on the move. Main sectors to watch. A lot kind of deteriorated last week. Communication services, consumer cyclical, these just kind of held up okay. Communication services did okay. Communication services, consumer cyclicals, and financials holding up probably the best out of all the sectors. So you have communication services, cyclical, and financial, best performers over the last week. Financial, communication services, consumer cyclical, all up here near the top of the 1 month. Consumer cyclical, financial, communication services, all up near the top of the 3 month. Technology was doing pretty good, but it got a little more smoked last week. Technology is always a bigger mover though, so decent kind of swing trading type environment. So what will I be doing this week? Well, basically just cautiously looking at some longs if we start to see pushes higher. The elections coming up, that's going to be probably cause some volatility. So maybe after that, kind of in the aftermath, see how that plays out. And yeah, so probably be pretty cautious until that comes in. And then after that, trade the trends that are out there. So have a great trading week out there, and happy trading.